Welcome to CEO Insights. I'm Marilyn de Guzman with Investing News Network. I'm speaking with Jordan Trimble, President and CEO of Skyharbour Resources, about the company's latest updates and the uranium market. Welcome, Jordan.
Thanks for having me.
Yes, great to have you. Let's start off our discussion with just a brief introduction of what Skyharbour Resources is.
So Skyharbour is a high-grade uranium exploration and early-stage development company. We built up the company over the last 10 years. We've now amassed one of the largest property packages by acreage in the northern part of Saskatchewan in the Athabasca Basin, which is the highest grade depository of uranium in the world. It's also one of the top mining districts as ranked by the Fraser Institute. We've just recently added to that portfolio and now have 24 projects covering over 500,000 hectares or over 1.2 million acres. These projects range from earlier stage exploration properties, more grassroots projects that we typically group into our prospect generator business. So we actively look to vend those projects out to partner companies who will then advance them. And then the earlier stage projects ranges all the way up to more advanced stage exploration assets that either host uranium resources and or high-grade uranium results in previous drilling, and that's multi-percent U3O8 in historical drilling. So the two main projects that are more advanced stage exploration assets that we are actively advancing, that we're funding the exploration and the drilling at, are our Russell Lake project, which we've recently optioned from Rio Tinto. We have an ongoing 10,000 meter drill program there, making very good headway, very happy with what we're seeing at this inaugural drill program at the Russell Lake project. And adjacent to Russell Lake, it's a co-flagship project with Russell, project called Moore Lake, which we own 100% of. It's been the focus for the company over the last 6 years. We've done a fair bit of drilling there over those 6 years, and we've had high-grade drill results including 21% U3O8 over 1.5 meters, and that was within 6% U3O8 over 6 meters. So two primary projects, and then well over 20 other projects that, again, are a part of our prospect generator business. And just a quick note, with the prospect generator business, we've now signed option agreements with 7 different partner companies on 8 of our other projects. These 7 option agreements total to over $70 million in combined project consideration, including exploration expenditures funded by these partner companies, as well as cash and share payments, assuming that all of these partner companies complete their earn-ins at these respective projects. So a dominant land package, a lot of exploration and drilling funded by us and our partner companies across 5 or 6 projects currently and over the next 12 months. So a very catalyst-rich uranium exploration company with a focus in the Athabasca Basin.
Right. So your focus is in the uranium space, and there's been a lot of activities in terms of emerging and rising demand for uranium. And then on the other side, you've amassed this big land package. So where do you see your company in terms against that backdrop of, a rising demand in uranium? And where do you see your company playing a role in that dynamic?
Yeah, it's a great question. So our job is to find the nuclear fuel of the future. Our role in this part of the cycle as an exploration and early stage development company is to discover, delineate, and de-risk high-grade uranium deposits in the Athabasca Basin that can then be used to fuel nuclear power plants. There's a lot to unpack there with the uranium market, the fundamentals, but just to cover some basic high-level points. So uranium is the fuel in nuclear power. Nuclear power is the only source of emissions-free baseload, meaning 24/7, reliable, affordable, scalable electricity generation. Just in the last few years, we've seen a notable resurgence in this industry, very much underpinned by 3 major macro trends. One being electrification, the need for more electricity globally. Hand in hand with that, and second is clean energy and decarbonization, again, nuclear being the only source of baseload emissions-free electricity generation that we have. And third, and probably most topical right now, is energy security and independence. So with the war in Russia and Ukraine, that has really kind of put the industry in a bit of a bind here, as Russia is a major player in the uranium mining industry as well as in other parts of the nuclear fuel cycle. So with the enrichment and conversion markets, they represent about 30 to 40% of global capacity. So as Russia is carved out from the West, and Western nuclear utilities have to be less reliant on Russia and Russian allied states, that means that they're going to have to start sourcing uranium and other nuclear fuel products from Western suppliers. And so getting back to companies like Skyharbour and other explorers, developers, and producers that are active in the Athabasca Basin, these companies are going to have to step up to the plate going forward and provide that long-term secure supply of uranium, especially for Western nuclear utility companies. Now, looking at the fundamentals, the supply-demand fundamentals globally for the market, these are some of the strongest underlying fundamentals of any commodity out there. You have currently about 190 to 200 million pounds of annual demand. Now, what's exciting right now is that demand is really starting to pick up quite a bit globally, and we're seeing the advent of small modular reactors and other advanced nuclear technologies that will just add fuel to that fire and increase the demand going forward. But that current 190 to 200 million pounds of annual demand is in the backdrop of primary mine supply of only about 140 to 145 million pounds of primary mine supply. Now, over 50% of that primary mine supply comes from Kazakhstan, Russia, and Uzbekistan. So getting back to the market bifurcation that we're seeing east versus west, that's where you're going to have to see new supply coming from Canada, coming from the US, coming from Australia, and other Western jurisdictions. So we have this major global supply deficit. It's even more exacerbated in the West. The last 10 years, we've seen major underinvestment in this sector, in the uranium mining industry. So we simply don't have the new supply slated to come on in the next few years to meet the demand and meet the growing demand going forward. When we take a step back and again look at the contracting market, so uranium's typically traded through a spot market. The spot price has been increasing recently, now north of $53 a pound. We're seeing that steadily move higher. There's a big disconnect right now too between the mining equity valuations and the uranium price, but we are seeing that your spot price move higher. We've actually seen utilities coming into the market, buying in the spot market. We haven't seen a lot of that recently, but that's a very exciting new development, and typically that can lead to major price spikes in the spot market. So there's the spot market and the contract market, long-term contract market. Most uranium, most material historically is traded through long-term contracts. So a utility company will purchase from a producer through a long-term contract. And what's exciting right now in this market is there's a new long-term contracting market that's really starting to kick off here. So we're seeing the contracting volumes globally pick up quite significantly. In 2022, we saw about just over 120 million pounds contracted, up from 100 the year before and up from 70 to 80 the prior years. Now, if you look at when the uranium price has moved significantly historically, and when you have these big bull markets in this commodity, it typically corresponds with years when there's a lot of contracting volume. Now, we are seeing this contracting volume, these volumes pick up. In fact, just last week, Cameco had a very, very bullish quarterly and earnings call where they explained that this contracting market is really starting to ramp up. They alone have contracted over 250 million pounds recently. And so what's happening as the contracting picks up, as more material is committed to by in these long-term contracts by utilities, that just simply means that the next marginal buyer is likely going to have to pay more for the next pound of uranium. And as we see the contracting market and the spot market tightening up, that will lead to upward pressure on the uranium price. We're nowhere near the historical highs of about 250 million pounds contracted annually, or the replacement rate contracting rate, which is about 180 million pounds. As we see these volumes pick up, I suspect we'll also see the uranium price pick up as well. So a lot of tailwinds right now. We've seen that also. We've seen these holding companies, these physical holding companies like the Sprott Physical Uranium Trust in Yellowcake, add to that by sequestering tens of millions of pounds out of the market. And we haven't seen much activity from most of them recently, but that's another potential catalyst in the coming years. As more money comes into the sector, we can see, as we have seen in the last few years, more material bought and sequestered by these physical holding companies. So a very exciting time, both on the demand side for uranium, but also as we see supply constrained globally, and as we see the market bifurcating east versus west, there's a very strong case to be made that we'll see higher uranium price, and this should be reflected in higher share prices across the board for uranium equities.
Right. And I want to pick up on something you mentioned. So with the rising demand for uranium, because nuclear reactors are being restarted or being built, new ones across the globe, but supply will have to keep up with that. But as we know, starting up a new mine takes years, more than a decade even. So what do you, in your opinion, what would accelerate that, in terms of just being able to catch up with that, or at least close that gap? Is it just more investments? Like what are your thoughts on that?
Well, I think the supply gap ultimately gets filled. It has to be filled with new production coming online. But you hit the nail on the head. It doesn't. It takes a while to get a new uranium mine permitted and to get it into production. It's very technical mining, typically speaking, certainly in the Athabasca Basin and other parts of the world. And there's several additional layers in permitting a uranium mine versus other metals. So as I said, there's been a major period of underinvestment for the better part of the last 10 years, over 10 years now since Fukushima, and we're now seeing this coiled spring, if you will, scenario play out, where there just simply hasn't been a new primary mine supply coming online to meet the growing demand. And I think what's surprising a lot of market participants is just that, the growing demand with the existing fleet. So reactor life extensions, some of these reactors now extended to over 80 years of operating life, but also the new reactors coming on globally. You look at China, for example, they have plans to build 150 new nuclear power plants over the next 15 years. That's 10 nuclear power plants in China alone coming on each and every year for the next 15 years. More nuclear capacity in one country in the next 15 years than has come on globally in the last 35 years. And then I did touch on these new small modular reactors and SMRs. We're seeing just here in Canada the first SMR coming online at the Darlington plant in Ontario, $1 billion that's been injected from the Canadian Infrastructure Bank to develop and commercialize that SMR. And I think these SMRs could be a brand new source of new demand for the West, and I think they'll have a major impact on that demand number going forward. There's over 435 operable reactors, just under 60 currently under construction. That's not including any estimates for SMRs, some of these advanced new nuclear technologies and models coming on. But there's hundreds more ordered, planned, and proposed globally. I mentioned China. China, but also other parts of the world like India, Russia, the Middle East. These countries and these regions need clean baseload electricity, reliable electricity, and nuclear is really the only option for that.
Right. And it certainly helps, I guess, with the supply, increasing the supply if you're in the right neighborhood. So speaking of the Athabasca Basin, if you want to talk about the most recent news that you've had is, acquisition of the Dufferin project. Can you talk a bit more about that? What was the value proposition for that project?
Yeah, absolutely. So we announced the 100% acquisition of what's called the South Dufferin project. We're acquiring this from Denison Mines in a mostly stock deal. Denison has been a very large corporate strategic shareholder of Skyharbour for a number of years. They're obviously becoming a larger shareholder now. They've been a very important partner company of ours, and their president and CEO, Dave Cates, is a director of Skyharbour and personally is quite a large shareholder. So there are a lot of synergies there. The South Dufferin project is a drill-ready project in the south central part of the Athabasca Basin. We did not have much exposure to this part of the Athabasca Basin, and it is host to several high-grade zones of mineralization, including just to the north of our South Dufferin project, the Centennial deposit, which is a very high-grade uranium deposit owned by Cameco. Now, we're on this same major structural trend, the Virgin River Shear Zone, which trends in a northeast-southwest direction, and a number of the drill targets at South Dufferin are based around this big regional structure. It has been drilled historically. There is some anomalous uranium mineralization in some of the historical drill holes, and we are going to be looking to find a strategic partner, a capable strategic partner to come in and option or JV this project from us. As I mentioned earlier, we have two parts of our business at Skyharbour. First and foremost, we are an exploration and early stage development company. We have focused exploration and drill programs that we fund at our main projects, Russell and Moore Lake. And then the other projects fall into the second part of the business, which is prospect generation. So South Dufferin slots in nicely with those other projects that we still own 100% of, that we're looking to find partners on. We had just announced a few weeks prior as well some additional staking. So like I said earlier, we now are one of the largest landholders with over 500,000 acres, and we've done this through property deals like the one at South Dufferin, as well as through online staking, which is a very inexpensive means of acquiring properties in the Athabasca Basin. So we will be looking, as I said, to bring in new partner companies at some of these recently acquired projects while we stay focused on our exploration and drilling at our main projects. And we are working our way through a major 10,000 meter drill program at our Russell Lake project, which is just south of the McArthur River Mine, the highest grade, richest uranium deposit in the world, just northeast of the Key Lake Mill. And it basically encircles, Russell Lake encircles Denison's flagship Wheeler River project to the north, to the east, and to the south. In fact, a number of the targets at Russell Lake are the continuation of uraniferous conductors from Wheeler River. So it's a very exciting new acquisition. Russell Lake is for Skyharbour, and we're excited to finish this initial 10,000 meter drill program. We're going to be following it up with another drill program later this year, and to have a steady flow of news and drill results coming out over the coming months.
Oh yeah, that's a huge undertaking, and we'll look forward to hearing more about results of that drilling campaign that you're doing at Russell Lake.
Yeah, no, it's the main catalyst for the company. And just one last note too, the Moore Lake project, our co-flagship project adjacent to Russell Lake, we are planning some additional exploration and drilling there this year, as well as a mineral resource estimate at the high-grade Maverick zone. As I pointed out earlier, some very high-grade historical drill results at that property, and a lot of upside potential still there as well. So we'll be testing both targets at Russell Lake as well as at the adjacent Moore Lake project. And we do benefit from mining infrastructure, including road, power lines, and a camp at the Russell Lake project to bring our drilling and exploration costs down at both Russell and Moore.
Right. Well, appreciate you joining me today and sharing your insights on the market and some news from your company.
Thank you for having me.
And join us again next time for another engaging conversation on CEO Insight.